Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Trent Simmons of Bess Corporation. Trent, thank you for joining us.
Glad to be here.
So what were you doing before you joined this business?
Yeah, that's a good question, and it's a long answer, but I'll try to do my best to keep it as short as possible. But my dad started a small business 25 years ago in the energy markets, and through that we had a retail electricity provider. And I had just gotten out of college and was doing IT staffing. And I heard that the retail electricity provider was going to build up a commercial division. So I told management that I wanted to be responsible for that. I wanted to take charge of that and got the job. I'm sure my last name probably helped me get the job. But 2 months after I got that job, I had to let my dad know that the companies were now giving me a paycheck. It's kind of that was a fun surprise to give him. But I helped build up the company, and NRG ended up acquiring that. And I moved over to another company within our family of companies, and my dad quickly divested that one as well. And so I kind of saw the writing on the wall, and I created my own company. We have ranch land, and I converted that into USDA grass-fed ranch land and started marketing our beef direct to consumer here in Dallas, Fort Worth, and eventually through the rest of Texas. And then actually we've sold our beef to all 48 continuous states in the union. Was having a lot of fun with that. And then at the same time, I had somehow convinced a Swiss professional triathlon squad to take me on, and they agreed. So I jumped at that opportunity, spent a couple of summers in Switzerland racing in Europe, which was a lot of fun. And then eventually my dad sat me down and said, "Hey, I almost 65. I really did not want to take over a new startup, which you left in my lap when you went to Switzerland, which was the beef business, the Provision House." And he said, "And by the way, our flagship company has been around for 25 years. He just said, I want to retire. What do we do with these? What do we do with the people in them? And would you be interested in taking it all over?" And I immediately jumped at the opportunity. First of all, because it sounds really fun to say you're a professional triathlete, but that's about where that ends. And two, it always been my dream to be a part of and such an integral part of running the family company. So I was proud to have that opportunity.
Well, that's a great story, and glad to hear you're a professional triathlete. I guess we'll stop there. And then tell us more about the Bess Corporation and what does it do?
Yeah, so that initial conversation that my dad and I had when he looked at me, I'm one of three sons, and small business is in my blood. I've seen my mom and dad toil through starting up a company, then growing it and having it be very successful. And then even at the latter stages of the company, still trying to keep it going and wring money out of the company and also keep the people that have been with you and trusted you for 25 years, keep them around, keep them paid. And so when he looked at me and said, what do I do here? What do I do with the company? It made me think that there's probably other people like my dad that bootstrapped their careers, had very successful careers, and now are trying to figure out how to maintain their legacy. I like to joke that TriStar Producer Services was the first company he started. I like to joke that was his fourth child. And just like other business owners, it's very personal to them. And just to see it shut down because nobody else wants to take it over because it's too small, maybe for a private equity company to take over, that's not a reason for a good company to be shut down. And in my opinion, it's not the size of the bank account that makes a successful company. To me, it's the longevity of the company.
So you're taking advantage, I guess, of a generational shift that's happening as the boomers age out and the millennials come in. Not everybody has the same passion as their parents, and so the business has to go someplace. Is that correct?
Yeah, that's a lot more eloquent and quicker way to say what I said. That's a good point.
I get calls from quite a few economic development groups around the country, especially in the rural areas where the firms aren't passing over to other people or to family. They're just shutting down because the owners aged out. And so it seemed like that's just happening across the country. And with the boomers retiring, you would expect a lot of that to happen. And you would think that the children would pick up the business, but it turns out children have other passions and interests in life and don't necessarily want to take it over. So it sounds like you're filling a key gap in the economy there as transition companies to the next level of management.
Yes. I mean, everybody says small businesses is the backbone of this economy, but saying it and actually doing it or taking part of it are two different things.
Great. So tell us more about the kind of companies you're bringing in. What are you seeing out there?
Yeah. So we've seen actually a lot of interesting companies since we really got this up and running, and we are involved in anything from beef and ranching to natural gas marketing to tax practices, bookkeeping and accounting services, all the way to commercial manufacturing of countertops. So we've seen a diverse set of companies which the original owners are looking for a way to gracefully exit. And so we go in with our eyes wide open and are pretty willing to look or at least hear anybody's story.
Well, that's great. So you mentioned a granite company and why that's a great business. And it sounds like some of these businesses are the same, that they do very well as a business, they make money and so forth. But tell us more about that. How long can those businesses last?
Yeah, and that's a fair question. And funny thing is, our countertop company, everybody asks us, and it seems like the question that everybody seems to say is, well, what about Amazon or Facebook? Aren't you afraid they're gonna take over? And we just got done installing countertops in one of Amazon's new headquarters. So people still need countertops. I don't think a virtual reality is gonna change what a solid surface can do. And so, these old economy businesses still have some life to them, even though there may be you need to be better polished, I guess. But even Amazon needs countertops. I think we'll be okay.
Well, it'll be a while before a drone delivers you a granite countertop to your house. So I think you're safe for a while on that one. But it does beg the question. It seemed like it's service businesses that can't be disrupted so easily by online retailers. It seems like retail is going through an apocalypse now, and the ones that are standing are the ones that provide an experience rather than just a trinket, because you can get the trinket online. And so there's a big shift going forward. What do you see in that direction?
Yeah, Mark Twain's attributed, the quote's attributed to him. History really doesn't repeat itself, but it sure does rhyme. I mean, I think business always moves in cycles, and I think we're gonna continue to see that. I mean, we may see different ideas on old concepts, but it'll still all look somewhat at least rhyme in a sense. I mean, Amazon, not to continue to talk about them, they are a great company, but Sears was the first one that started a catalog, and obviously it was a mailing catalog, but it was a catalog for rural buyers, and then they started building actual stores. But Amazon just took that and made it an online catalog, and so it wasn't necessarily that Amazon created a brand new idea. They just took that idea and used a different medium in which to present that idea. And I think you could almost say that for a lot of different ideas. I mean, or a lot of companies. I mean, WeWork is another one you can think of. People are Uber. I mean, people need to get around somewhere, and they just thought of a new, interesting way in which to get around. And I think that's one thing that we learned through, whether it was gas marketing, whether it was retail electricity, whether it was operating a working ranch, or even countertops, is we at least understand the language of business, which is the operations, the finance, the accounting. And just like Latin can take you pretty far in other languages, at least understanding some of the foundations, we felt like we were willing, as long as we were willing to roll up our sleeves and actually get into the trenches and work with our basic knowledge of business, we'd be well prepared for most things that came our way.
So when you take on a company, what is the biggest challenge in transitioning it from the original management team into your program? What are the challenges that come up?
Yeah, that's a great question. I mean, the main challenge is the key man risk. A lot of these small businesses are kind of, if you've heard of the book, The Millionaire Next Door, a lot of these small businesses, the original owner started the business, built up revenues to a reasonable place, was able to live through the business very comfortably, and just decided, hey, my risk aversion has kicked in, and I just want to keep the business where it is so I can maintain my lifestyle and keep my employees taken care of. But they, for the most part, are the business. They have the client relationships, or they know when it comes to buying inventory, they just know how to spitball it. There's not really a sophisticated way of doing a lot of things because they've done it that way for, maybe 30 years. So being able to kind of take what's in their brain and at least put it to pen and paper, or develop the relationships they've developed or the expertise they developed, it kind of takes time. So with a lot of these small business acquisitions, we try to see if we can develop a relationship with them that they'd be willing to stay on with us at least 6 to 12 months in some type of role, so that we can continue to learn from them as much as possible, so that we feel we have at least a very basic competency in order to take it over. But yeah, the key man risk is the highest risk that we face.
Do you find an opportunity to update the business with new technologies for marketing, lead generation, back office that gives you increased margins? Is there an opportunity to improve the business that way?
Yes. I break it down into evaluating a company. I break it into two factors, right? It's the qualitative and the quantitative aspects. And this is just finance 101, but the quantitative is easy. It's what's the numbers, what are the balance sheet, cash flows, bank statements, tax returns. What does all that say, and how do we generate a valuation from that? The qualitative aspect of a business is a lot harder to put a value on, and we've been able to break it down into what I call the 3 Ps, or people, product, and process. And the process aspect is the one where you can see the most value because, as I said, they may be using the same process that worked back in 1993. But if the people have bought into what you're trying to do and the product has been around for as long as it has been, maybe it needs to be updated. But if you can improve the process, or at least bring it to 2019, there's a lot of value to be unlocked there.
Well, that's a good point. It seems like there's a great way to update it and make it a better process as well. And any other challenges you face aside from the key man risk and the technology updates?
Operating a small business in general is always hard. Bigger companies, public companies, they can go to the public markets and sell debt. And the owners or managers of those businesses aren't personally responsible for the risks involved in taking on that much debt. We offer benefits to all of our employees, and our employees are pretty diverse, and white-collar service business people to blue-collar manufacturers. And so since we don't, and our companies individually don't have the big pocketbooks and cash, they're still individually looked on as small businesses. They don't get to have the freedom or creativity in which to kind of more tailor make whether it's their benefits or whether it's how they want to financially structure their own balance sheet. Those challenges still don't escape us. Now, the power we bring is that we can operate more of a middle market type company to them, and that provides a little bit more freedom. But running a small business is always hard because you're more involved, it's more personal, and I don't think that'll ever escape any of the businesses we do.
That's true. There are challenges of the small business, but on the other side, there's a lot of them. So it sounds like you have a great market opportunity to continue this effort. In the last few minutes that we have here, what else should we cover that we haven't?
I always share this personal story because it had such an indelible mark on me growing up. And it's really the why for what started this whole idea and concept. I mean, everybody wants to be successful and everybody wants to be wealthy in what they do. But my why for creating this was really personal. And back in 2001, I was a senior in high school, and I think everybody can think of what a 18 or soon to be 18-year-old senior in high school was like. And I certainly hadn't matured to hopefully how mature I am now. But Enron was the largest customer to our business at the time, to the tune of $2 million. We were going through some personal issues at home. Namely, my mom's dad was dying. And so my parents had taken him into their home for hospice care, and then Enron collapsed. So emotionally, my mom was obviously very, very emotional, very sad seeing her dad die. And then on top of that, as my dad's trying to take care of the house, Enron leaves a $2 million hole in the company. And I just remember it vividly because my dad at the time was trying to figure out what to do. My older brother was already in college. I'm trying to get into college. And just like any other small business owner, since it is kind of, you have a little bit more freedom in how you handle these losses. He could have easily pushed that loss onto the business, and he could have ridden off to the sunset, been fine, no problem. But him and his partner at the time decided to take a $2 million personal loss and assume that loss on their personal returns instead of having the company swallow that. Because in their opinion, it wasn't anybody in our companies that had operated fraudulently. We were working on the aspect that that the companies we were dealing with were upstanding companies with integrity, and it didn't happen to be the case. And my dad and his partner at the time didn't think any of our employees should be punished because of somebody's criminal actions. And that's always stuck with me, and that's something that I'm proud of, and how he handled that situation. And it's a specific story to our small businesses and the story we get to tell, but that's a common refrain that you hear about in the small businesses in which we operate in. Each of them have a special story like that, where the business owner has that moment. And it's, do I let the company fail and do I get to just kind of ride off to the sunset, or am I willing to put my money where my mouth is and keep fighting for the company and these people? And those are the companies that we look for. We've seen similar stories in the other companies that we acquire, and that's what gets us excited to be willing to do, whether it's commercial countertops or tax work, because of things like that.
Yeah, small business is certainly a life-setting event, and life-changing event happens in them for everyone that goes the distance with a small business. So that's a great story there. So to close out, how best for listeners to get back in touch with you?
Yeah, I'm trying to do better with that. I have an Instagram page, and that's one way to find me, or through LinkedIn. You can find me on LinkedIn, Trent Simmons. Bess Corp, BESS Corp is on LinkedIn. We have a website, which is bestcorp.net. And then my email. Anybody can always email me. I'm always happy to talk to anybody in regards to business in general or small business in particular. So more than happy to have anybody email me too if they want to talk further.
Great. Well, we'll put those in the show notes. Thanks for taking time to share with us today, and hope to have you back for a follow-up soon.
Hey, I really appreciated it. This was a lot of fun.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.